SoFi stock is facing turbulence again, but is it just noise, or is something major brewing beneath the surface? In this video, we'll break down the data, explore recent geopolitical tremors without naming countries, examine institutional behavior, and uncover what's really happening behind the scenes with SoFi. If you're wondering whether to hold, buy more, or step back, this deep dive will help bring clarity. Hello everyone, welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads and also enter our giveaway. But before that, alert, this is not a financial advice video. Let's begin with the latest movement in SoFi stock. On the surface, it fell by 3.15%, a drop that may appear ordinary in a volatile market. But if you dig deeper, you'll see this wasn't just about technicals or sentiment. SoFi stock fluctuated between a low of 14.23 cents and a high of 14.90, with a whopping 71 million shares traded. That's serious volume, especially in the second half of the trading day, when algorithmic activity picked up sharply. And while most think this dip is purely market-driven, there are deeper forces at play. Rising tension in the Middle East, with one power suggesting they control the skies above another region, has sent shockwaves through the global market. In response, another nation reportedly started preparing for potential retaliation, especially if foreign involvement escalates. These geopolitical tremors are spooking investors and pushing big institutions into a risk-off mode. The market after hours started to show signs of stress. Moving over to economic indicators, retail sales data disappointed, showing a drop of -0.9% compared to a forecast of 0.4%. Not a great sign. But if you look at it another way, weak retail data could become fuel for interest rate cuts down the road. On the flip side, manufacturing production data actually looked better, both on a month-over-month and year-over-year basis. So it's a mixed bag, macro stress on one side and manufacturing resilience on the other. Within SoFi's world, there was a rare but notable move from Anthony Noto. Known for his quiet presence compared to other fintech CEOs, he finally broke the silence with a congratulatory post celebrating SoFi's subsidiary, Galileo. Galileo just clinched the top position in Javelin's 2025 Digital Issuance Provider Scorecard. This achievement reinforces the belief among long-term bulls that Galileo could be SoFi's secret weapon and its primary revenue engine from 2026 onward. It might not seem like much now, but foundational work often goes unnoticed until the growth becomes impossible to ignore. Despite these positive internal developments, SoFi didn't issue any SEC filings or official press releases. So its performance continues to be largely swayed by the broader market narrative. One interesting behavior to note, short sellers returned 78,000 shares today, indicating that about 12.96% of SoFi's free float, around 140 million shares, is currently sold short. It's a familiar tactic. Shorts often sit back and let natural sell-offs do the heavy lifting. And when you combine that with algorithmic trading, it's a recipe for heavy volatility without much effort from the bears. But the real action may be on the horizon. Tomorrow and the day after are key. Historically, that's when short sellers become more aggressive. One shift worth noting is the cost to borrow rate, which has turned slightly negative, about 0.22% annually. While that might sound minor, it indicates that some brokers are actually paying traders to short SoFi. That's not a regular occurrence and shows how skewed sentiment has become. When you glance at the options market, it gets more interesting. There were $14 million in call options and $3.4 million in puts. About half of all options trades were bearish, with the majority targeting a price point near $12. Yet bullish sentiment still exists, aiming for prices above $15. This shows a deep divide between pessimism and hope, with neither side fully in control. The market's indecision is palpable. In terms of transactions, large-scale buying and selling activity was observed both on public exchanges and in dark pools. One massive transaction involving 2.3 million shares temporarily pushed the price up, but that momentum didn't last. After-hours dark pool data revealed trades of 1.5 million, 8.6 million, and 1.6 million shares, likely indicating institutional sell-offs. The timing of these trades coincided closely with the geopolitical news emerging from the Middle East. It's likely institutions are hedging or outright reducing exposure to mitigate risk in case tensions escalate further. As we close the regular trading session, SoFi sat at 1443, hovering between two key resistance zones. The $14.40 level is now considered a critical pivot. Should it fall further, the next support is around 1350s. Beyond that, traders are eyeing levels like $12.61 and 12.5 cents as potential buy zones. These figures line up with predictions from institutional investors expecting SoFi to drift closer to the $12 range in the near term. There's no fresh analyst coverage or significant changes to the financial fundamentals of the company. That silence speaks volumes. It seems most analysts and funds are waiting, watching the macro situation unfold, waiting for either a calming resolution or a full-blown crisis to develop. Now shifting our focus to technical indicators. SoFi is still trading above its major moving averages, the 50-day, 100-day, and 200-day averages. The 100-day sits at $13.34, which is now acting as a soft floor. The 50-day and 200-day are very close together at $12.86 and $12.77 respectively. If SoFi breaks below the 100-day average, there's a good chance it could bounce between the 50 and 200 levels in a tight wedge pattern. The stochastic RSI is also sitting in a neutral zone, which means SoFi isn't technically overbought or oversold right now. That's a favorable setup if any good news or even reduced fear hits the market. And finally, the wild card in all this, the central bank. What the Fed chair says tomorrow could shift the entire tone of the market. If the message is once again higher rates for longer, it could drag everything down further. On the flip side, any hint of a softer stance might serve as a short-term catalyst for recovery. So where does that leave investors? Well, it's nearly impossible to time the absolute bottom. The most consistent advice you'll hear from seasoned traders is this: focus on dollar-cost averaging. If you believe in SoFi's long-term vision, whether through Galileo, student loans, or fintech innovation, then building your position slowly over time may be the wisest course of action. Yes, the road is bumpy. Yes, the macro landscape is volatile, but innovation often shines when fear clouds the market. In the end, those who zoom out tend to win. Watching the minute-by-minute ticker can drive you crazy. But building conviction, staying patient, and focusing on fundamentals, that's how long-term wins are made. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.